Why are you so keen to find growth markets? Marketers are always looking for growth markets, but what the business leaders want is just growth. You can get growth in a flat market, and most markets are flat, almost as easily as in a growing market. Here's why. Let's take a market supplied by 2,500 SKUs. If we plot the dollar growth for each SKU, it looks like this. Each bar is an individual SKU. If we arrange the SKUs so that the highest growth is on the left and the biggest losers on the right, it looks like this. You can see that most of the growth comes from a few SKUs, and most of the loss also comes from a few SKUs. Overall, this is a slightly growing market, but 90% of the SKUs are not doing anything. Now we'll take a growing segment of this market and look in detail. There are 3 suppliers in different colors, and the bubble size is the annual value. Along the axis is the rank of that SKU from the previous chart. Again, there are a few SKUs creating the growth, and the vast majority which are irrelevant to growth, and then there are a few SKUs that are pulling it down. Suppose you were the product manager of supplier J4. Undoubtedly you're watching the winners, but maybe you're not paying as much attention to the losers. And maybe you're trying to pay attention to all the SKUs in the middle as well. So now let's look at a flat market segment. SKU by SKU. We've got some winners, quite big winners on the left. We've got a lot doing nothing, and a few big losers which balance out the winners and make the market flat. If we look at one supplier in the market, it also has some winners and some losers. The shape is the same as for a growing market. So what the product manager has to do is the same. So you can be a loser in a growing market as easily as a winner in a declining market. So why limit yourself?